Okay, so we've got a lot to cover today about commercial real estate. You sent over a ton of research and articles. Seems like you're really interested in triple net leases, huh?
Yeah, and classy properties too.
Yeah, for sure. So we'll definitely hit those. But basically, this deep dive is going to be like your cheat sheet to understanding CRE, all the need-to-know stuff, and none of the fluff.
Sounds good. And remember, commercial real estate, it's more than just those fancy office towers you see in the movies.
Right.
It's everything from retail spaces and industrial warehouses to multifamily apartment buildings and even, more specialized properties like hotels and hospitals.
Right. And you were talking about office spaces.
Yeah.
And in your notes, you highlighted that whole Class A, B, and C thing. Why is that so important, especially for someone looking to invest?
Well, the classification system is a good way for investors to kind of quickly assess the quality, location, and potential return of an office building. So Class A properties, right, they're the cream of the crop. They prime locations, modern amenities, top-tier tenants, but obviously they come with a big price tag too.
Yeah.
Class B buildings, they're a little more moderate.
Okay.
And then Class C properties, those are often overlooked, but they can actually present some interesting value-add plays.
Value add. Now, that sounds interesting, and I think that's something our listener would want to know about. Especially, they want to maximize returns, right?
Exactly. Value add basically means you're buying a property, a lot of times a Class C building, and you're improving it.
Okay.
You're increasing the value and hopefully increasing the rental income too.
Got it.
So think, renovations, upgrades, maybe even just repositioning the property to try to attract those higher paying tenants. It's definitely more hands-on, but it can lead to significant returns.
Yeah, so I'm starting to see why you highlighted Class C properties in your notes. It's not just about the location, it's about seeing the potential. Now, before we get too deep into investment strategies, let's talk about ways that someone can actually get involved in CRE.
Yeah.
You mentioned REITs in your research, right? Those have always seemed a little mysterious to me.
Yeah, REITs or real estate investment trusts, they're kind of like a gateway to commercial real estate for people who don't want to buy a property outright.
Okay.
You can think of it like buying stock in a company that owns and manages income-producing properties. So you benefit from the appreciation and the dividends, right?
Yeah.
Without the hassle of actually being a landlord.
So if our listener was interested in, let's say, multifamily properties, they could invest in a REIT that specializes in apartment buildings.
Exactly. So, for example, there's REIT-X.
Okay.
They focus on multifamily properties in growing urban markets.
Yeah.
And they've actually seen a Y% return in the last year, which is pretty impressive.
Okay, that makes REITs much less intimidating.
Yeah.
But what about those who are ready to dive into, direct ownership? Where do they even begin?
Well, first, you really need to understand the key metrics that are used to evaluate CRE investments. Two terms you'll hear all the time are net operating income, NOI, and cap rate.
Ah, yes. NOI and cap rate. Those came up a lot in your research, too.
Yeah.
Break those down for us.
So NOI, it's like the profit a property generates. You take the rental income and you subtract the operating expenses like maintenance and property taxes and insurance.
Yeah.
Cap rate, it's kind of like a price to earnings ratio for real estate.
Okay.
And it helps you compare the potential return of different properties. By dividing the NOI by the property's market value, a higher cap rate generally means a higher potential return.
Got it.
But remember, it could also mean higher risk.
Okay, so NOI tells you how much money a property is making.
Exactly.
And cap rate helps you see if the asking price makes sense.
Yeah.
Aligns with that income.
Right.
Now, speaking of price, how do people actually finance these CRE purchases? I'm guessing it's not as simple as getting a mortgage for a house.
No, you're right. Financing commercial real estate, it's a whole different ballgame.
Okay.
While traditional bank loans are an option, you'll also see more specialized financing, like SBA loans for small businesses, bridge loans for those short-term needs, and even hard money loans from private lenders.
You mentioned that our listener seems particularly interested in triple net leases.
Right.
Maybe this is a good time to talk about the different types of leases.
Yeah.
And how they impact both landlords and tenants.
Absolutely. Lease structures, they're crucial in CRE. So you've got your gross leases, where the tenant pays a fixed rent.
Okay.
And the landlord handles most expenses. Then there are net leases. where the tenant covers some operating expenses like property taxes.
Okay.
And then triple net leases, where the tenant's responsible for pretty much all the expenses.
So it sounds like with the triple net leases, that's the one you highlighted, it minimizes landlord responsibility, right? Why might someone be interested in that, especially with the Class C property?
While triple net leases, they can be attractive to investors who are looking for a more passive income stream.
Right.
The tenant takes on more responsibility, for the expenses. And that gives the landlord a more predictable cash flow. This can be really appealing. With Class C properties, because the lower purchase price, it can offset the potentially higher management demands of the other lease types.
Right. So it kind of aligns with that value add strategy you were talking about before.
Exactly.
But before we go on to market trends, I want to touch on the human side of CRE. You mentioned a bunch of different players in your research, investors, brokers, property managers.
Yeah.
It seems like a pretty complex ecosystem.
It is. You've got your developers who build or renovate the properties.
Right.
Brokers who facilitate the transactions.
Right.
Investors who provide capital.
Yeah.
Property managers who handle the day-to-day operations. And then, of course, the tenants.
Right. Who occupy the spaces.
Occupy the spaces, yeah. So yeah, each player kind of has a specific role. And understanding, their motivations and how they interact, it's really key to understanding and navigating, the CRE landscape.
So it's not just bricks and mortar, right? It's about the people and the relationships.
Exactly.
Speaking of relationships, how do macroeconomic factors like GDP growth and interest rates, how does that impact the commercial real estate market?
That's where it gets really interesting, because commercial real estate is super connected to the broader economy. So a booming economy, right? Strong job growth, it usually translates into more demand for commercial spaces. And that drives up rental rates and property values. But then, an economic slowdown, it can lead to decreased demand, vacancies, and even declining property values.
Right, it's like a big puzzle where all the pieces are interconnected. Now, you mentioned that you were prepping for a meeting about urban revitalization in your notes, and this whole discussion about Class C properties and value add strategies, it seems like that ties into that, wouldn't you say?
Absolutely. A lot of times urban revitalization involves repurposing or upgrading existing buildings, and many of those fall into that Class C category.
Right.
So investors who understand the value add strategy, they can play a really key role in transforming these properties and contributing to the economic growth of a neighborhood.
I'm starting to see how all these pieces fit together. It's not just about understanding, one piece like cap rates or lease types. It's about seeing the bigger picture, right?
Exactly. And speaking of the bigger picture, there's one more piece of the puzzle we need to discuss, and it's location.
Right.
Which, as they say, is everything in real estate.
Right. Location. We'll explore that further in part 2.
Yeah, location in commercial real estate is key. It's not just about the city or even the neighborhood.
Yeah.
It's about thinking about the proximity to transportation, access to amenities, the surrounding businesses, even the overall vibe of the area.
Okay.
All of those things can really influence a property's desirability and ultimately its value.
So even two properties that seem pretty similar in the same city could have very different values based on those, what did you call them? Micro-location factors.
Exactly. Think about a retail space, for example. One that's located on a busy street with a ton of foot traffic is going to be way more valuable than one that's kind of tucked away on a quiet side street, even if the buildings themselves are pretty comparable.
Right. It's all about visibility and accessibility, especially for businesses that really rely on that customer traffic. Now, you mentioned that you once almost lost your shirt on a Class B office building because you didn't fully appreciate the importance of location.
Oh, yeah.
What happened there?
Oh, man, that was a tough lesson. Early in my career, I was so focused on the financials and that potential for a value add play that I totally overlooked some key location red flags.
Like what?
Well, the building was in a business district that was kind of, declining, limited access to public transportation.
Yep.
And very few amenities nearby. And, it was just a nightmare trying to attract tenants, trying to keep tenants. Ended up having to sell it at a loss.
Ouch. Yeah, that must have been painful. But I guess a valuable lesson, it really highlights how important thorough due diligence is. It's not just about focusing on the numbers, right? You got to consider those less quantifiable aspects, like location, like market trends.
Yeah, you got it. Speaking of market trends, that's another super critical factor when you're evaluating CRE investments.
Right.
Because, the world is constantly changing And those changes impact the demand for different types of properties.
Absolutely. And you highlighted some big game changers in your research, like e-commerce and remote work.
Right.
Let's unpack those. So first, e-commerce. Obviously, online shopping has been booming. But how is that impacting the demand for, those traditional retail spaces?
Well, we're definitely seeing, a shift away from those massive enclosed shopping malls that were so popular a few decades ago. But, it's not like the death of retail. Like some people have been saying, it's more like an evolution, right? Successful retail spaces today, they need to offer more than just products. They need to provide an experience.
Experiential retail.
Exactly.
That's a term I've been hearing more and more. What does that look like in practice?
So think about, retail spaces that offer interactive displays, pop-up shops. Maybe they incorporate entertainment or dining options. It's about creating a destination, a place that draws people in and makes them want to stay, something that you just can't get online.
Yeah, so it's not just about buying things anymore.
Right.
It's about connecting with people and having that memorable experience.
Yeah.
Okay, that makes sense. Now, what about remote work? Seems like everyone's working from home these days. Does that mean we're going to see the demand for office spaces just plummet?
I don't think it's quite that simple. While it's true that some companies are downsizing their office spaces, a lot of others are actually reimagining those spaces to prioritize things like collaboration and innovation, creating more, dynamic and flexible work environments.
Okay.
So, for example, we're seeing this rise in co-working spaces, flexible office arrangements, even hybrid models that combine, remote work with those in-person gatherings.
Right. So it's less about the cubicles.
Exactly.
And more about creating spaces that foster creativity and teamwork.
Yeah, it's about adapting to the evolving needs of the workforce and realizing that traditional 9-to-5 office model, it's not the only option anymore.
Right. Makes you wonder what those Class A office towers are going to look like in the future.
Right.
Maybe more like collaborative hubs or innovation centers rather than just rows of desks.
Right.
Okay, so we've covered e-commerce and remote work, but there's another trend that's been gaining momentum in CRE, and that's sustainability.
Yeah.
It seems like it's not just a niche concept anymore.
It's not.
It's becoming a core value.
Absolutely.
For investors, tenants, and developers.
Yeah, we're seeing a huge surge in demand for green buildings, the ones that prioritize energy efficiency, water conservation, and using sustainable materials.
Right, and I'm seeing a lot of, articles and research papers about green buildings and LED certification. Is this all just a marketing ploy, so they can charge higher rents? Or are there really tangible benefits to investing in sustainable property?
Oh, there are definitely some tangible benefits. Not only do green buildings reduce environmental impact, but they also tend to have lower operating costs.
Okay.
Which is obviously attractive to both landlords and tenants.
Right.
And then, they often command higher rents and resale values because of that, growing demand for sustainable spaces.
So it's a win-win for the planet.
Exactly.
For the bottom line. Okay, now let's talk about technology. You've highlighted the rise of PropTech in your notes, and it seems like everyone's talking about how it's revolutionizing the industry. But for someone who's not, a tech expert, what does PropTech even mean in practical terms?
So PropTech is basically any technology that's being used to enhance or disrupt the traditional ways we buy, sell, manage, and experience real estate.
Okay.
It's kind of a broad umbrella. It covers everything from online property platforms and virtual tours to data analytics, smart buildings, and even blockchain applications.
Okay, so it's more than just listing properties online.
Yeah.
Or using an app to manage rent payments.
Oh, yeah, much more. Think about smart buildings. They're using sensors and data to optimize their energy consumption and even improve, the occupant comfort.
Right.
Or virtual and augmented reality. It's being used to create really immersive property tours. It can even help with the design and construction.
It sounds like technology is creating a more efficient and transparent, data-driven CRE landscape.
It is. And this is really just the beginning. The PropTech revolution is still pretty early, and we can expect to see even more innovative stuff coming out in the years to come.
That's a lot to process. So much has changed in CRE. It seems like the pace of innovation is only accelerating. And with all these trends and technologies shaping the future, it can be overwhelming for someone who's just kind of starting to explore the field.
Yeah, it definitely can be a lot to take in. But it's also an incredibly exciting time to be involved in CRE. There are just so many opportunities for those who are willing to embrace change, learn, and adapt.
I'm curious, based on all this, what advice would you give to our listener, who's eager to kind of delve deeper into the world of CRE?
Well, the first thing I would say is to never stop learning.
Okay.
The CRE landscape, it's constantly changing. So stay curious. Read industry publications, attend events, connect with, experienced professionals, and just absorb as much knowledge as you can.
Yeah, that's great advice. It sounds like continuous learning is key in a field like this.
Oh, it is. The more you know, the better you'll be able to identify those opportunities and make good decisions. And, don't be afraid to network.
Right.
What are you hoping to get out of commercial real estate? Are you looking for passive income? Long-term appreciation? Maybe a combination of both? How much risk are you actually comfortable taking on?
Right.
Answering these questions will help you, narrow your focus and come up with a strategy that works for you.
Right. It's like having a roadmap before you set out on a journey.
Yeah.
You need to know where you're going, how you're going to get there.
Exactly. And remember, due diligence, that's super crucial.
Okay.
Before you put money into any property, you have to research the market, look at the financials, really get to know the property itself. Don't just rely on what the seller's telling you. Dig deep, ask questions, and if you need to, seek advice. Talk to lawyers, accountants, experienced CRE people.
You even highlighted an article in your research all about due diligence. It seems like it's a step you can't skip, especially with these big investments.
Oh, you can't. Due diligence, it's the foundation of successful CRE investing. It's all about mitigating your risk and making smart decisions based on, facts and analysis, not just a gut feeling or speculation.
So do your homework, connect with the right people, and always, always do your due diligence.
Always.
Any final words of wisdom for our listener as we wrap up this deep dive into the world of commercial real estate?
CRE, it can be a really rewarding path for building wealth and achieving your financial goals, but it's not passive.
Okay.
It takes knowledge, it takes strategy, and it takes a willingness to adapt to a market that never stops changing. Embrace the challenges, stay informed, and don't be afraid to get guidance from people who've done it before.
Well said. We've covered a lot of ground today, from the basics, property types, investment strategies, to the impact of, macroeconomic trends, the rise of prop tech. We explored the rewards, the risks, and we really emphasized how important education, networking, and due diligence are.
Yeah, and hopefully we've sparked our listeners' curiosity and given them a good foundation, to continue exploring this really dynamic, ever-changing industry.
Exactly. And remember, this isn't the end of your journey.
It's just the beginning.
The world of commercial real estate is full of possibilities.
So many.
And it's really up to those who are willing to, learn and adapt and innovate.
Absolutely.
To really shape the future of this field.
Yeah. With all this talk about the future of CRE, it makes me think, we talked about, remote work and how it's changing office spaces. But what other types of commercial properties, do you think are going to be in high demand in the next 5 years? Will we see a surge in logistics and warehousing, all that e-commerce, or maybe healthcare facilities, with the aging population? What do you think?
That is a great question. And I think it's one that our listeners should be thinking about too. As we've seen, the CRE landscape is constantly evolving. And those who can anticipate the needs of the future, they're the ones who are going to succeed. And we've given you the knowledge and the tools to navigate this crazy world. So now it's your turn. Explore, analyze, make your own predictions.
Yeah, we'd love to hear your thoughts. What do you think the future of CRE holds? Share your insights, your questions, your predictions, with us on social media or on our website.
Until next time, happy investing.